Greetings, this is Dr. Jeffrey Scott. This is my Market MRI Pro update for the week ending Sunday, May 4th, 2025. Thanks so much to a number of you that joined me earlier today for one of my 3-hour seminars, 3 parts. One, sort of the basics of top-down investing and how I use HDSI and TradeStation, TradingView, wealth charts, and Market MRI Pro to understand the market and help me decide positioning long, short, and where to go. Second part was the official launch of Market MRI Pro with a $300 discount for new purchasers and those that have purchased my prior software. I have what I call stacking discounts. The more you buy, the bigger discount you get. And then the third hour, or the last piece, not an hour, was I took a look at Royal Caribbean Lines, a $230 stock, and I showed my unorthodox style of option trading. I buy options instead of buying the stock. I don't look at the Greeks. I look at 4 or 5 different trades that have the outcome that I'm looking for, which is control more shares, less costs, limit my downside to what I know on the way in, with an unlimited upside. And I think it was well received. I always enjoy having that conversation. So thanks again for those people that attended. I'm trying to decide what to do about the recordings. I know I'll place them in Top Down Trader today. I will probably consider putting them on YouTube, but I'll decide that after I eat my dinner. Sometimes I say things that may come back to haunt me. I think I did okay. So we'll see. But again, thanks for being here. If you're new to my channel, hit the subscribe, hit the alarm. If you like or don't like, but you're constructive on the don't like, put something in the remarks section or email me directly. I can change things. Now, I can't help the fact that I sneeze, cough, and my nose whistles. So don't bother complaining about that. I'm going to have surgery one of these days, but probably not till I retire. And I'm not in Florida, so my allergies are a whole lot better. I'm out in my Santa Fe home right now. So the title was, does a breakout above the 50-day mean new highs are next? 2 email addresses, markupmripro@gmail.com or hdsidoc@gmail.com. This is for educational purposes only. Anything I talk about should be considered in the spirit of education, not investment advice. I do these videos to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools and lots of platforms, but I'm really proud of what we built or what Praveen built in Market MRI Pro. In fact, Praveen joined me in Santa Fe for the weekend so we could launch the official release candidate, which has a whole bunch of new features that were not in the original launch, which was more of a soft launch, late beta. So those of you that own it already, watch the video when I post it because you'll see the new things we added. Very exciting time. Again, this is done. I did this today. Thanks to those who attended. Orange County meeting will be June 6th through 8th. Residence Inn and Suites, Tustin, California. I guess I should start taking off the $300. It's now $400. The room is filling up. We will have a online as well. And I record each of the sessions, and unless one of the speakers specifically requests that attendees don't get a copy of the video, I will publish, or not publish, I will share with the paid attendees the videos, and at least on my presentations, the PowerPoints. As you can see, I've got some great people lined up, commitments from John Person, Dan Fitzpatrick, and Chris White, and I think there's a good chance we'll get Matt Caruso as well. That will be, I think, the best. My Google group is called Top Down Trader. At some point I probably should rename it, but I am a Top Down Trader. You just go to Google Groups, sign in, it's free. You get invites to special events like today. You get added discounts. You get access to me, access to Praveen. And oh yeah, we have a great price. It's free. It will always be free. And it's better than free. I give you discounts. And lastly, know your news and earnings. I think we can sort of circle Wednesday at 2 o'clock and 2:30 because it's the Fed meeting, the Fed report, and the press conference. Um, yeah, I'm a little bit of a cynic, and when I see that on Friday you got all these Fed speakers, I think they're all lined up to speak in case Chair Powell does what he sometimes does, which is says things he doesn't intend or uses a tone he doesn't intend, and the market blows up, and then or the market goes to the moon, and everybody else talks us back. So it'll be interesting to see major earnings this week. Now, those that follow me regularly would have heard me say about 10 days ago, I'm going back in, and one of the three stocks that I picked was Palantir. As I talked about during my seminar today, you don't have to hit home runs all day long. You need to, do market performance maybe a little bit better and avoid the big drawbacks that you get in bear markets, and then have a couple home runs a year. Well, Palantir is probably one of those home runs. You also saw Summit bounce, and that was one that I put out a number of letters or notes in my top-down trader. So you got Palantir, you got AMD, Supermicro, Tempest AI. We talked about that today a little bit. Uber, ARM, Dutch Brothers Coffee, Shopify, Coinbase, Affirm. So there's a lot to be aware of. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. If you're looking for the wealth charts presentation, it'll be posted sometime before Monday, or before the market opens on Monday. Here we have the daily briefing. It shows me that on Friday we are strong. Dollar was down, internet was up a bit, diamonds were up 1.38, 1.5 on the Qs and the spiders, and 2.25% on the Russell. If we look up here, you can see except for Bitcoin, if I said internet, I meant Bitcoin, was down at the bottom of its range. Everything else was in the upper half, which is bullish. If we look over here, we got new highs again. New highs greater than new lows in each time frame in NYSE and the NASDAQ. This is the first week in ages that we've seen that. I think we've had 9 days in a row up on the S&P. Wow, 2 great weeks in a row for most of our portfolios. If we look at the 5-day change, you'll see super, 3.44 on the Qs, 3.28 on the Russell, 3 on the diamonds, and 2.93 on the spiders. Everything worked. Even Bitcoin was up 1.7%, and the dollar was up 0.5%. If you look over on here, you can see 1-day performance on S&P 500 sectors: leadership, financials, industry, materials, and tech. Laggards are the defensive: staples, utilities, real estate, and healthcare. If you're a growth stock investor like me, that's exactly what you want to see. If you look over 5 days, only one thing was down, and that was energy. The laggards also staples and healthcare. Somehow discretionary was next, but look, discretionary was up 1.94%. That's a great week. Industrials up 4.3, technology 3.9, finances 3.5. Those are superstar weeks. Even real estate was up 3.5 as well. Over here you have 3 different indexes and great information. I think Praveen did an awesome job of this, built upon some of the great work of Sagar Nandi and SuperiorProfit.co. You can see the number of sectors up in blue versus the day before. 10 out of 11 S&P 1500 sectors up. 91% of industry groups, 90% of stocks were up, and 88% of stocks were above the midline. We're bullish right now, big bullish on this on the buckets. We look at the NASDAQ, more tech-driven. All the sectors were up, 84% of the industry, 71% of the stocks, and we're at 79% above the midline of their Bollinger Bands. And then the NYSE, 91% of sectors up, and each of these were improved over the prior day. 91% of industry, 81% of stocks, 85% above the midline. That is a picture of a bull market. Now, am I ready to call it a bull market? We're still retracement in a downtrend, but we've had multiple follow-through days. I think you have to be long this market. I'll feel better about it when we take out the 200s. And we'll look at that in a few minutes, but I've been long the last 2 weeks. I haven't gone to margin yet, but that's the next thing to be my conviction. Bucket briefings, we have shifted to the right, which means More stocks in the upper half of the Bollinger Bands, but when you see how many are above the bands, 8, 9, 11, and 9 respectively, none of those are big enough for me to be concerned about. So enjoy it while it lasts. We have no idea how long that happens. On the market breadth tool, the NYSE, it took out its 200. If I see the same thing happen on the NASDAQ, the Russell, the Dow, I got to think we're in a new bull. That could happen this week. Now, there are things that worry me. One thing that worries me is, look at this breadth thrust on stocks above the 17 days. I have never seen anything like it going back years and looking at how fast it moved up. 85% of the stocks are now above their 17-day moving average on the NYSE, 79.5 on the NASDAQ. If I look backwards, stocks, this is where stocks reverse, even below there. So I think its own high jump, here we got to 70%, hold on, 78%. So we are at a place where markets like to reverse. So that is one thing that worries me as a big term, interests me. This is new high, new lows, finally positive. 52-week new high, new lows, AD lines, up, down, volume positive, and no new signals down here. This is a bullish looking market. Why am I at all holding back my enthusiasm? Here is a weekly picture of my timing model, S&P, Qs, Diamonds, and Russell. Notice the line on the bottom is still red. So my longer time frame is a downtrend. If I flip to the daily, you probably know this from my daily videos, we are in an uptrend. Now it takes a second to change. There we go. And you can see breakout. Look at this. Not only do we break out above the WMA in yellow, we took out trendline resistance. That is what we wanted to see. The next thing to worry about is going to be that 200-day moving average. Now, we're starting to get ripe on the big caps, spiders, and some of the the Qs are also showing, although you don't see it here. I think we got some work to do on our 21-day new high, the 13-week new high, new low on the Qs. On Sagar's tool, it's up near the top. Let's look at it on the weekly and see where it went. Yeah, we're not extended to the point of reversal. I think we're going to start to see us having a little bit of stretching from a deeply oversold condition. If I look at the U.S. index ETFs, messed them up a little bit from today. The key point here is this is the 200 on I'm going to have to play around with this a little bit. But we are broken out on each of the indices. They are below their 200. Somehow it disappeared over on this one, but I'll get it all back put together. The question is, can we break above the 200s? All of them look like this, except they're much closer to the current price. So massively good day. Let's look at the weekly because it's the end of the week. And you'll see very bullish candles across the board on the major indices, even the IWM. We got some glitch where the wrong names were written in this release. That's being fixed already. VIX came down further and the dollar started to bounce a little bit. On the commodities, on the daily charts, when risk is on and we're buying the market and buying growth, it looks like the risk, the things that like risk, like gold, silver, come down. Oil is bouncing, but it's really come down a lot from where it was. You can see there, can't you? Let me fix that. I got a little bit overzealous. 10-year and 30-year, again, ignore the names. We've already fixed that. I just have to hit the new release. 10-year and 30-year were up. Again, they were up because when we think there's a lot of risk and it's risk off on trading, rates come down just like gold and silver do. I mean, the rates come down and silver and gold go up when it looks like the market, like there is risk in the market, more risk. So my assessment on the market, retracements in downtrends typically go down further. There is great strength in this one we've taken out the 17-day. We've taken out the trend line. We've taken out the 50-day. I think we take the 200-day next, since I have to reset my charts a little bit. Let me just jump into this one here, and you can see what I'm talking about. We took out the 50, took out the 50, took out the 50, and took out the 50 on Friday. Right overhead is the 200, the 200, the 200, and the 200's up here. If we can clear out that 200 on each of these, I'm going to become a big believer in this market. We're getting close, getting real close. So I am long this market. I have not gone to margin. Each day I've added to my positions. I don't have any contra ETFs. So I think I just told you the recipe for a limit down open on Monday, so I get beat up the most. I'm kidding. I think this market's going higher. It's not to say it's without risk, but until it breaks above the 200, I'm certainly not going to over leverage myself. Now, what's working? I already told you the defensive things probably are not working. I look at the ratio charts. You can see communication straight up on Friday. You can see technology making a big improvement. And you can see industrials looking good, as are materials, a little bit of a white line. And what's falling? Forget where they're at, but falling: staples, utilities, real estate, and healthcare. So it looks like risk on. If we go to the JES layout, I have a number of different ways that I could sort this market and look for things that I might want to be interesting in. So let's go right to the top-down view. Let me clear all my filters. We need to get the clear all filters on the top-down view as well. So I don't have to do them individually. You can see here we got listed sectors. On the right, we have industry groups. And so my 3,500 stocks or so are put into sectors. In fact, if I hit all the sectors, you could see 3,512 stocks. If I hit all the industries, it might be a little bit more, because some we couldn't tell what sector they're in, or they're not assigned one by our data provider, which is more likely. Since we said that technology, industrials, and communications were the leaders, let's highlight those. There's 1,145 stocks. I'm not looking at 1,145 stocks. Let's look over here. Let's rank by one-day move the percentage return on the industries. Let's take the top 10. So we just took the top 10 industry groups. From the top 3 sectors, I'm down at 267. Still too many. But I'm not buying $2 stocks. So I'll drop my filters down, and let's put a filter on greater than 500K and $5 price. Hit OK. And come on, we're supposed to filter down. All right. It worked earlier. Let's see what happens. Let me take them out and try it again. Unless the filter is still on. Price greater than 5. 5 greater than 500. Hit OK. Well, I got the boss right here who did the program. He's going to figure out why that didn't impact on my industries, but he's probably thinking, Jeff, if you loaded up the last version of the software, it wouldn't have any of these problems. So I'm not going to say anything until I load it up. So what I'm going to do here is I'm going to not rank them by one-day performance, but I'm going to look at 2-day momentum. And I am going to start at the top and work my way down. Empower semiconductor stocks going to have to clear the 200. Still a ways to go there. Nice move off the bottom. Relative strength OBV looks good, not extended. I don't hate it, but I'd rather buy things above the 200. You want to see a beautiful chart? How about Spotify? Is it expensive? It's really expensive. Pull back, breaking out here. All blue dots, EMS signal, CPR, relative strength OBV are your friends. Breaking out here, clears this closing high, and you're at new highs. I like new highs. So Spotify looks interesting. I believe the earnings are out. Earnings came out 429. They had a negative surprise. Figure that one out, and it's still going higher. That's power. Any news to drive it? Look here. Nope. Somebody said it has room to run. If you were curious, you can click on the link. It'll pull up the article. That was a nice touch that Praveen built in for us. Let's kill that. Let's go down the list. Meta. Um, you know, it's had a big run off the bottom. That's all right. I bet it still goes higher. Took out the 50 and the 200. Relative strength is high. Still well off at 742 high. I like Meta here. URI, it's one of my favorite stocks of all time. I had a big position in it early on. It's still got some resistance to go through, probably going higher. OLAD, too far down. So now I'm going to look for things that I like more than Spotify or Meta. And I would go down the list. And isn't it cool how fast this online program updates charts? CRS, I think it's a specialty steel, took out its highs here. Heck, if I've been watching this closely, now's not the time to buy. You had a wedge pop for people who like those kind of things. Right there. Boom. That was the day to buy. 188. It's already up 25 bucks since then. Darn, coulda, woulda, shoulda. Can't look at everything. FedEx, I remember when it got hammered, hard for me to buy that. So ATI, it's another specialty steel company, triple tops, maybe quad tops. Interesting to see what happens there. DoorDash, don't love the name, don't love what they do. I'm an Uber Eats fan myself, but you got to like the chart. So that's basically top-down investing at its finest. You pick the top sectors, the top industry groups. Sometimes I'll go back, remove those sectors. No, I got a lot more industry groups, and I'll fill in investment banking, education, which has been hot, REITs, insurance, and coal. And just see if anything else is interesting that made it to the top. Trupanion had a nice breakout here. Took out these tops. Look at the blue dots in the volume. Look at relative strength at OBV, not extended. I can't even remember what they do. I think I've seen their advertisements, high relative strength. I like Trupanion. Trupanion looks interesting to me. Let's look at the earnings. Big earnings growth, turning positive. Revenue growth, surprise on revenue. Even though it missed surprise on earnings, pretty big improvement. That one looks interesting. Trupanion, is this an early growth name? What else came up here? LRN. I remember when China did something where all the education stocks went in the proverbial toilet. But my God, look at this pattern. So one thing I might want to do is let's clear everything and let's look at education. And let's just go down this real quickly. LRN, we love it. PRDO, beautiful. ATGE, beautiful. LAUR, break it out, beautiful. UTI sounds like a urinary tract infection. I can't buy that ticker. Not KLC. EDU's too far down. Not Coursera. Not. So I think PRDO looks great. LRN, it's extended. It's at 100. PRDO's at 93, still extended. How about LAUR? Yeah, that's the problem. These things are extended. So that's two approaches to top-down investing. And now let's clear the filters. See, it's working now. I don't know what I was doing. Price greater than 5, and it got smaller. All right, let's kill it. I think it was still on from the impulse. Let's go back to the impulse. Let's make sure the filters are gone. And let me show you a couple of things I like to do. Let's go back in. We're at 3,500 stocks, volume of 500, price of 5, takes it down to 1,800. Let's go back and drop another filter, and let's put in the pullback and uptrend. Okay? I got 272s that are meeting my pullback and uptrend criteria. Now I'm going to go in here and let's rank them by number of dots. It's already ranked, and let's go down the top. Fulgent Genetics. I think it's in the same group as Tempest AI. Must have had earnings. Let's see. I think it would be really nice if we could put like an E above the date when earnings came out. We have the dates in our What you don't realize is Praveed's sitting here, and everything I want something, I'm saying it on the video because I think TradingView does a great job of putting the E's there so you know when the earnings came out. Look at this, May 2nd, not a lot, 4 cents. In fact, 4 cents versus a minus 1 cent, that's pretty good. Um, a big surprise in revenue growth. Fulgent looks interesting. This is a group that's been unloved. Is it turning around? Maybe. Um, Instacart. This one I liked a lot. When you see I drew a line, sort of a wedge pop line, this is something I like. That looks very interesting, except it's extended and it's far enough for the 200. Probably would pass. Here's one that it's not. Tennessee Music. I thought it was kind of junky, meaning not tight. LRN was tight, and junky, wide moves are less likely to do well, but that's a breakout above resistance. Terex, um, again, far down, pretty big range, 25% to get up to the 200, um, certainly is possible. Here's that PRDO. I like that. We know, except it's extended. Liquidia, which says it's a healthcare stock. I have no idea what it does. Well, it must be because they got sued by United Therapeutics. I would have thought this was like a car leasing company. But Liquidia, um, you know what I like? Touch the tops, touch the tops, breakout, uptrend, pullback, breakout, volume, breakout, momentum, a CPR, EMS is positive, relative strength, and OBV. I think this one looks great. This is one of the ones that I liked. So certainly that's one way I can look at it. And then I could go back and let's kill them all. Let's go in, take off that. Let's do 2 days momentum up, price above $5, volume greater than 500,000 shares. We saw Terex before. Okay, again, stocks got to go up from somewhere. I just rather buy things that are high to higher highs, but that's not horrible. Pump, no thanks. Aspen Angels, this is woodworking, floors and stuff, 2 down in the pattern. We like LAUR, we're concerned about its level of extension. Eh. And National Fuel Gas, I like this one as well. And again, another one that kind of broke out here. So this one looks interesting. Relative strength and OBV looks good. So I could give you a list. Techs, if you like them, in the bottom. NFG looks good. LAUR looks great, except it's extended. FLGT. And then just a couple of other ones that I liked. I'll show you, and then I'm going to be done, and I'm going to have it less than 30 minutes today. OS One Spa World. Yeah, it's down in its pattern, but I kind of like this breakout here. EMS, CPR, breakout volume, relative strength and OBV look good. That was one. LTH. Lifetime Fitness. Um, it looks good. I mean, is this, I'm not sure, see if it's there yet. All right, this is when you hit delete and you start all over. Trend line. And what do we have there? I guess certain people will call that a wedge pop. So I like this as well. Let's look at earnings. And I just love that everything's built in here for me. Earnings are this week, so that might be a negative. So hope you liked the short video, 30 minutes. I gave you a bunch of stocks, gave you my assessment on the market. Remember, this is education only. And look to my seminar being posted on YouTube sometime this weekend. And if you're interested in more about my Market MRI Pro, which is the tool I just used, you can email me at marketmripro@gmail.com or hgsidoc@gmail.com. $300 off the first year price for anybody that orders during this launch period. Have a great rest of your weekend. And this is Jeff Scott signing off. And let's see what Powell has to do to kill the market. Kidding. Hopefully he helps the market.